So for finance news now, Rachel Pupazzoni joins me in the studio. The big talk today, of course, is the fact that the big four banks haven't passed on these rate cuts from the RBA. Have any of the banks at all passed on these cuts?
Fazia, we've heard from two of the big four, NAB and CBA, which are passing on part of the 25 basis point cut that we heard from the RBA yesterday. We've also seen some smaller financial institutions pass on 20 to 25, so almost the full cut onto mortgage people who have a mortgage. But those two of Australia's big four banks have defied calls by the Treasurer to pass on yesterday's rate cut in full. The official cash rate now sits at the record low 0.75%, of course, after the RBA cut 25 basis points yesterday. So the Treasurer, Josh Frydenberg, disappointed that CBA and NAB not passing on the full cut to borrowers. But with 75 basis points cut since June, analysts have warned the cuts are now weighing on net interest margins or the bank's earning power. Yesterday, CBA cut its variable owner-occupier rate by 13 points. NAB lowered its variable owner-occupier rate by 15 basis points. We haven't heard from Westpac or ANZ yet about any decision they may make. The big four banks have reported a combined 4% drop in first half profit to $14.5 billion as they sort of manage that balance between the interest rate that they charge people who have a home loan with them, as well as the interest rate on people who have bank deposits, not forgetting that any interest rate cut also affects people who might have a wad of cash sitting in bank account hoping to earn interest on that money.
OK, so what does this then mean for NAB? Because they've downgraded their profit forecast.
Yeah, this is a separate issue, Fazia. Of course, we had the Hayne Royal Commission last year, which highlighted some of the issues that we have with financial institutions in Australia, and we're still seeing the effects of that today. We've heard that NAB has set aside an extra $1.2 billion. This is to help pay back customers who were wrongly charged for fees, one of the big issues that came out from the Royal Commission. Now, those customers were charged almost double what that amount was previously estimated, hence today's lift. So the new provisions will include another $832 million for the extra customer remediation, as well as $348 million. This is after a review of the bank's software capitalisation policy, so clearly an issue there for the bank too. So far, the bank has put aside $2.1 billion to repay customers. And that news, of course, Fazia, has sent the share price for NAB sliding today. OK, what about the rest of the markets? How are they doing? It's a pretty lacklustre day on the markets. We're down more than 1%, this following a lead from Wall Street overnight, Fazia. The All Ordinaries down 1.3% or 83 points. The ASX 200 even further into the red, 1.4% or 88 points negative. All sectors are seeing losses today of between 1 and 1.5%, mining and financial stocks among the worst. Financial firm Hub24 is leading the negative scoreboard, not a good position that you want to be in. NAB share price naturally lower after announcing that extra remediation cost, and minerals miner Orocobre down 3.5%. There is some positive news though. Main pharma shares have soared after the pharmaceutical company locked in a deal to sell a new contraceptive drug to the US, up 18%. US recorded its worst manufacturing figures in a decade overnight. This was exacerbated by the ongoing US-China trade war, and that saw the Dow Jones, the S&P 500 and the Nasdaq all dropping by more than 1%, which is what's triggered as part of our big falls today. To commodities, gold is also lower at $1,477 an ounce, and on oil, OPEC output has fallen to an 8-year low after the attack on Saudi oil plants. The 14-member organisation pumped almost 29 million barrels per day in September. We're seeing prices lower. The Australian dollar has added some value today, but we saw yesterday and overnight it fall, obviously after the RBA rate cut, as well as that weak data out of the US and the Eurozone. We saw it fall to its lowest level since 2009. It was down to 66.72 US cents. It's regained a bit of that now. It's worth 67.1 US cents. Fazia, that is the latest from the markets.
Rachel, thanks very much.